right, guys, how we doing? Sam here with you. It's Valentine's Day. It's February 14th here. We're kind of midday, and I'm starting this series here specifically for YouTube subscribers. We've talked about introducing the Forex markets to cryptocurrency traders, and I'm kind of approaching this with a few assumptions. One being that you have just a general idea of what foreign exchange is, or what the market is. That you've done a little bit of trading, perhaps in cryptocurrency. And the other assumption I'm making is that you have either the free or perhaps one of the paid versions of TradingView. So as everything I'm going to demonstrate here will be on TradingView. So I thought I would approach this as trying to put myself in your shoes, as though I had never traded foreign exchange before. And while there's no shortage of information, if you were just to jump on your Google machine and start looking into Forex trading, there is no shortage of information. But I wanted to try and distill it down to just the essential information. Right? Don't condescend to me. Don't talk to me like I'm five. But give me give me the heart. What do I need to know? What do I need to understand so I can trade in this asset class? Okay. Well, I'm trying to keep this relatively short. So let's just focus on the basics. Okay, the first thing you have to understand is how gigantic the Forex market is. It is by far the largest market on the planet. So as a reference, you might consider the U.S. stock market. Right? So it trades 250, 260 billion a day. Forex is over 5 trillion per day. Dwarfs every other market. So, and you might understand why. So who's in here? Well, we've got all the world banks. You've got major institutions, hedge funds. You've got giant corporate. Well, not necessarily. It doesn't have to be a giant corporation. You've got businesses looking to hedge currency exposure. So we have an incredibly deep market. Liquidity never an issue in the foreign exchange. Well, I shouldn't say it that way. Some markets are more liquid than others. But if you're sticking with the major markets, liquidity works to your advantage. Unlike some of the shenanigans that happen in the cryptocurrency markets. Now, my belief is eventually crypto will get more liquid, that you will see more similarity between what's happening in the Forex markets and what's happening in crypto. It should be, conceptually, it should make sense to a crypto trader. If you're trading crypto, you're always spreading something against something else. That's the same thing that you're doing in the Forex market. Everything is always spread, one currency spread against another. So I want just with an appreciation for the size of it, you got to understand you're going into the deep water here. So trading is, a lot of people will think of it as zero sum. There's a winner and a loser on every side of a trade. Well, yeah, I guess my broader point is you're in the deep water here. So you got to understand that. Now, fortunately, the market is so mature, and there's so much incentive for brokers to encourage you to do business. They've made it easy for people to trade in foreign exchange without needing a 6 or 7 figure account. You can trade. Yeah, you can start it with $500. Really, you can start for $100. Now, are you going to get very far with that? Probably not. But it's not a bad way to learn. But I'm going to give you a better way to learn, because TradingView has made such quantum leaps in the integration with brokerage and making it a self-contained platform. So there's no need to go anywhere else. Now, if you're jumping on Google and you're good ideas, how to trade Forex, there's all sorts of things you might search for. You're certainly going to bump into what has been the default platform for retail traders in foreign exchange, and that's MetaTrader 4. No way around it. You're going to bump into it. So now, not that it's necessarily something I would discourage you from looking into. I've been using it for years. I still use it. But if I were starting from scratch today and I had never traded Forex before, I don't know that I would go there. I think I might stay entirely within TradingView, and I'm going to give you some examples of why that's the case. And this is only relatively recently that TradingView has made these improvements into order execution and integration with brokers. Now, many of you may have seen that, but I'm constantly amazed at how much people underestimate what's actually here in TradingView. This is really... Boy, these most recent upgrades are really very good. And again, you certainly have the option now to stay entirely self-contained within TradingView, whether it be if you're trading crypto or Forex or futures. It's all in here. Now, a few just kind of logistics, some things we need to understand, right? So, out of the 5+ trillion that's traded every day, you do need to understand that 85% of that is traded against the U.S. dollar. So, to give you analogous to, well, I guess you would think of it in terms of an analogy to crypto. While certainly we have the majors, Bitcoin, Ethereum, Litecoin, if we want to call those the majors. There's substantial amount of volume traded against the dollar, but if you were thinking about cross pairs, so if we were thinking about EOS to Bitcoin or Ethereum to the Binance coin, those would be cross spreads here. But the bulk of the market revolves around the U.S. dollar. So this is why I start here with you. These are so here you can do this a couple of different ways. So I'm over here on TradingView. I'm just going currencies. So we're going to see in this case, here I can get this I'm just going to the currency indices. So I can see kind of the direction here. Now this is not a direct spread that you would be trading, but it's giving you the direction of the market. So let me just kind of give you this example here. So if I go to markets and I went to majors, right, you're going to see the 7 majors here. Now, unlike the indices here where we include the dollar, well, these are considered the big 8, the major 8. Right, it's the dollar, the euro, the British pound, the Swiss franc, the yen, the Canadian, the Aussie, and the New Zealand. Those are the big 8. Right, but we can't, there's a futures contract on the dollar index, but where I'm trying to go with this, if we go to the major pairs, well, now we're down to 7 because everything's traded against the dollar, right? Hopefully that makes sense. So if we're looking here, this would be the equivalent of Bitcoin to the dollar, or Ethereum to the dollar, Litecoin to the dollar, EOS to the dollar. You get the idea. And if I went now over to minor or exotics, this might be Litecoin to Bitcoin or Ethereum to EOS, or as I suggested, these would be cross spreads. Right? So I'm not suggesting these are not a place to go. I just want you to appreciate that these are the majors, right? So if you were just getting your start in Forex trading, I would encourage you to stay focused on these 7, just while you're learning, and appreciate that there's plenty of opportunity just trading here on the big 7. Okay, so there are some just logistics that you need to understand, and as you may have heard me say in many videos, if you can trade crypto, you're going to find trading Forex just a breeze. Now, it's handled a bit differently in that you still have the leverage. So it might be 50 to 1, 100 to 1. You still have those kind of leverage advantages to you, and that's part of the attraction to foreign exchange. But you have to understand some of the mechanics so that you understand you're going to bump into, again, if it's new to you, you're going to bump into the terminology of what a pip is. Oh, there's a trade here made 200 pips. I got something, I was scalping and I got 12 pips. Well, pips, in simplified, you could think of it as a tick. Now, a pip stands for a point in percentage. It's the smallest increment with which we measure the difference between two currency pairs. So you need to understand that, just the mechanics and the logistics behind that, but I want to put it in context for you. And I thought the easiest way to do that is to show you over here just with a chart. Excuse me. So here's of the 7 majors, this is the most liquid, euro to the dollar, probably no surprise. Now, to demonstrate this and to understand, so certainly a chart's a chart, right? So how we're going to trade, they all trade the same way. It's the same pattern, everything you've ever watched me or seen me demonstrate or taught here, nothing changes. What's changing a little bit is the mechanics and the terminology. But so let's understand this. So the first thing we want to do, and again, it always surprises me how few people are taking advantage of this. If you click down here, and that's all I've done. But perhaps if you've got maybe you're using this now, but if you're not, these are all the broker choices for integration. Now, Forex.com is who we use. That's who I trade with. We have a relationship with them, so full disclosure here, right? So we are an affiliate for them. But if you are just coming to this and you're saying, okay, whoa. All right, before I put any real money at risk here, I strongly want to encourage you to get started with paper trading. One, they've done just a great job with this. You can trade anything. So once you log, well, I should show you this here. So let me disconnect here. So so you can integrate your brokerage account with any of these brokers here. Right, so depending on where you are in the world, if you're in the US, it's going to be one of these two. I've traded with both of them. I happen to like Forex.com. But if you connect here, so if you're logged into your TradingView account, all you have to do is click on paper trading and you're connected. Now you can trade any asset class within TradingView. You know that. Forgive me, but I'm consistently amazed at how people underestimate how much power is in here in TradingView, or have never really gone down here and looked into any of this stuff. So paper trading, good place to start. But this is where I can demonstrate. It's not about any particular trade that I have on at the moment. But if I'm connected to paper trading, then I have the ability to come over here, right? These little up-down keys, and it's going to show me. It's going to give me the order entry window. But I'm going to use this to demonstrate understanding both the risk and the potential reward and how a trade is measured in foreign exchange. So euro is a relatively easy one. So let's say we were, well, pardon me, let me back up. Now you have 3 increments with which you can trade in foreign exchange. There's the full standard contract where you would be controlling $100,000 worth of the currency, right? It's a margined position, so you're posting up a percentage of that as margin to hold that trade. So you can trade in the $100,000 increment, that would be full size. You can trade in the mini, that would be controlling $10,000 worth of that currency pair. You could trade in the micro, which is $1,000 worth of that currency pair. And this is just perhaps a decent vehicle to demonstrate this, so you understand the risk and the potential reward and the mechanics here. So let's just say I wanted to buy the euro. So just for fun, I thought we'd draw this up here. So this is a daily chart of the euro. Now, as you've heard me say many times, foreign exchange is incredibly technical. It's you can understand why, who are the players in here. It's very, very algo driven. So here's an obvious example. So we've just come up to the golden zone, but this looks like it's going to be close here as well. So look what we get here. So here, that's a good example here. So we're just stuck between 2 golden zones, right? It's very, very technical. You got an algo selling here, you got an algo buying here. Very, very technical. So if you have an appreciation for the technical analysis and the methodology that we teach, you are going to absolutely love foreign exchange because it is incredibly technical. I'm not saying it's easier. I'm just telling you it's very technical. So with this methodology, you have an advantage already. Okay, so let me pull that off here. Won't digress into analysis here, but so just say we're looking to be a buyer. Okay, so if you're new to this and you're starting with a paper trading account, I'm going to recommend that you work in $10,000 increments. So if we started, so that would be the equivalent of a 1 lot. You can think of it that way. So that would be, so if I just type in here $10,000 and I want to be a buyer here, well, I can come over here and I can down here, it's going to tell me the pip value. That you can think of it as the tick value, right? So the fluctuation in price. If I'm at $10,000, it's $1 per pip or tick, if that's easier for you. But the language in foreign exchange is that it's a pip. So we have a point in percentage difference here. So every fluctuation here in that trade, so if we go from 91, 92, that's $1. Now, if I do this at $20,000 and we do a 2 lot, well, okay, right, it's $2, right? So we go down to a single lot in a micro. Well, now I'm at, it's going to place that order. But here's what I want to show you. So then it's a penny a pip. So I just got filled there, right? And remember, it's paper trading, so it doesn't really matter. Okay, but actually not a bad place to be a buyer sitting at the golden zone. So here we see that now this is a penny a pip. Now, why would you be doing that? Well, maybe you funded your account with $500 and you're just trying to learn, right? So you want to learn when you want to have some appreciation for having real money at stake, although this is not a lot. So you certainly would have a wide range here, but you could take that up to, you want to trade, let's say you did 7,500 of value. Now you're at 80 cents a pip, right? So you want to do, let's do 8,000, right? So 80 cents, you get the idea. Okay, so if you wanted to go, so 50,000, something that I'll trade often, that's half of a full contract here, so it's $5 a tick. Okay, so pretty simple. Now, same thing. If I wanted to sell it, well, what I would propose to is an advantage over trading in cryptocurrency here. I'm going to need to post margin for this. but I'm not paying. I don't have to borrow it from another trader. So the brokerage firm is going to allow me to margin that position. So if I wanted to go short here, and again I think in contracts. So if I wanted to short in 2, it's gonna look to sell. And let me bring this back up so you can see it. So it's $2 a tick, right? So if I wanted a smaller position, maybe I'm laddering into something, and I don't want to go full throttle just yet. I might ease in with a $20,000 position, right? That will be relatively low margin. So let me see if I bring this up here. Oh, they're going to give me the margin requirement. Well, you'll be able to tally it quickly. I guess you won't here in the paper trading. It won't give you the required margin. It will. Your broker will do that. So if you were not in the paper trading account, if you were tied to your Forex.com account, it will give you the margin requirement to hold that. But it's going to be very small here in terms of holding a $20,000 position. It might be $200. So it's not going to require a huge amount of margin, maybe less than that, right? Forex.com. But most of them, you can set the leverage to what you'd like. So you want to be 10 to 1, 50 to 1. It really just depends on how you want to set up the account. But typically it's going to be maybe a tenth of that. So you might post, it'd probably be a good idea to have $200 available to carry that trade depending on the length of time you were looking to be in that market. So this then it's just as simple as just clicking sell, right? Unlike some of the calculations you need to do if you're trading crypto. Now let's do something a little bit different. So Euro's easy, the Canadian dollar. So let's say you were looking at, let's do the British pound to the yen. Okay, so we're going to go pound yen. Now this is going to get a little bit different. So now if we're looking at that, and I wanted to take a $1,000, well, let's do it in increments of 10,000. Okay, so now we're at 90 cents per tick, right? So it's doing the math for you, which is nice. Okay, so I want to do 10,000. Okay, let's say I want to do 25,000. Okay, now it's at $2.26. Now again, you're going to post margin to sell that position. Okay, but so that you can see the trade value on 25,000. The trade value is here, but what we care about is what's the pip value. So if I'm trying to determine the risk associated with any trade, and I'm using, oh, see, I just sold it, so that was just filled. That sell was just filled. So we come down here. So here's my so pound yen. Where are we? Do I have it? Oh, orders placed. Okay. So it's not in yet. So if I look here, I've got CAD yen, euro pound, the euro, and the dollar yen. I've got orders in here. These are all the open orders, and some of these I'm just doing for demonstration. Remember, this is the paper trading account, which is the purpose here is to demonstrate what I'm doing here, and not necessarily to be about positioning or something that I've analyzed in trading. I just want you guys to realize, one, this is here, and two, how easy this is to use compared to crypto. So again, but this is what I wanted you to understand. What's the value of the trade? So if I'm trying to set up something, and for assuming I'm a buyer and I'm looking here and I want to keep that risk at X amount of dollars here, I want you to understand how far that's going to move in terms of what the dollar value is here. So for example, if I wanted to put on, let's do a $20,000 trade, and I wanted to put a stop loss on it that was going to be a percentage here. So this would be $45 of risk. If I said, okay, I want 2%. 2% is gonna, let's see. I'm hitting enter. Yeah, so it's executing for me. I just want to show it to you. Oh, let me do that again. So I'm going to sell, let's do 20,000. And I'm going to put my stop loss here. I don't want to actually enter the trade. I want to just show this to you. 2%. Okay, so I'd be risking. So I have, what do I have here? This is approximately 11.5. In this account, I started with 10 just to demonstrate. So you can pick the amount. That's a good number. So if you're going to go into paper trading, put a 10 grand starter on there. So if I wanted to trade, if I wanted to put this trade on, and I wanted to risk 2% of my account, it's going to tell me exactly the dollar risk. And this is in the pound yen. It's going to tell me the dollar risk and what that percentage is. Okay, so now same thing with a take profit. If I wanted to get, if I was after 75 pips, it's going to tell me what that percentage of my account would be, where price needs to travel to get there, and what my return is going to be. Okay, so hopefully that makes sense. It's really very simple. Same thing here. If I wanted to be a buyer, 2% risk. I'm after 75 pips. So let's say I want to go after, I don't know, 100 and something pips. So nice round number. I'm after 100 pips. All right. So this is what I'm looking to make. So where does that price have to go? So if I'm, let's see if I'm gonna, am I long here? Let's see if I can just do this. So at this, let's see. Let me back up here. So let's go at the market. Let's do a limit order here. So this is kind of nice. So the current ask here. So let's say we're going to buy it. We're going to go 2 ticks above the ask. I'm going to put, I've got a profit target of 101. I've got a 2% risk on this. I'm going to buy the market. All right. So this is going to tell you this is demonstrating that it's working. Now I currently have this set to not show that these go away in a second. Once they get filled, they'll kind of fall off. So let me put this here. We'll go to settings and go to trading, and I'm going to say show positions, show orders, show executions, and if I want to show the buy sell panel, I can keep that. I can keep that up here for one-click trading. All right, so let's put that on so you can see. Now this is very tight because I'm on a daily chart. So let's go down to an hourly chart, and if I wanted to pull that, move that, and move them around at all, I'm like, I want this higher, I want this lower. It's right on the chart. So if I want to modify that, well, now I've modified it. Okay, so now I can see orders, what's been placed, what positions I have. It's really very, very good. And compared to crypto, I think you'll find it much easier. I just really wanted you to understand what a pip was so you can understand the risk and then how good this is, how well this is done. You've also got a dome over here if you want to look at it that way. I guess if you're a scalper, maybe that's advantageous. I don't trade that way. So here's the stop, here's the entry. You can add. So if you don't have a take profit on it. So for example, here in this yen trade, I don't have a take profit set on this. So if I wanted to edit that, I could modify it, change the take profit, simply give it the parameters that I'm looking for, hit modify, and it's done. It will modify that on the fly. Okay, very, very, very easy to do. Very well done. Again, it gives you the opportunity to experiment in here, get used to the order entry, get used to the risk and the potential return, structuring your trade, what those pip values are or tick values are between majors and crosses. They will be different, so you want to pay attention to that. But it's very easy to use. And again, the advantage of with paper trading here, we don't have to risk about doing something by mistake that would be very expensive. So that's something that I would encourage you to experiment with if you're drawn to this and you're interested in getting into Forex. This is a good place to start. Just do some experimenting with the paper trading. Get clear on where to set your target and your stop, how much, if you're entering 20,000 or 50,000 or 200,000, what that pip value is going to equal, and then adjust stops and targets, etc., based on whatever you're seeing. I like to see them here on the market, but if I were analyzing something, I could always just click over here and say it's getting in the way of my analysis for whatever reason. I want to take them off. Now they're still going to be down here. I can still go check any positions that I'm in right here or any orders that are pending. So here's those two that are working. Here are the positions that I have. So if I don't want it on my screen, I can always get it off, and then this can go away. So now I'm back to what do I think here? Now I've just got a blank chart. So hopefully that gives you a basic starter. Now for members, we have a lot of training content, and hopefully that's one of the attractions to our membership. We have put a lot of emphasis on FX trading while we all work through crypto winter here. And again, maybe that ends tomorrow, maybe it ends a year from now. There's no way to know. But as a trader, what's important to us? We want a decent amount of volatility. We want high liquidity. We want less shenanigans going on with whales and people that can manipulate the market. One advantage you'll certainly find in foreign exchange is that there is no whale big enough to move the market. There is no whale that can cause anything more than a very short-term effect. It's so liquid. There is no whale big enough to influence the market. So there's just some broader concepts for you to start with here, but that paper trading is very effective because again, you're not gonna hurt yourself playing around in there. But it's a good way to get used to order entry, get a sense of tick value, understand the risk, understand the margin requirements. Again, we recommend working with Forex.com because of that integration. They also do they're also very good. But you have other choices as well. But here's the place to start. Start with the paper trading. Get comfortable in here. Get clear on this. It's relatively straightforward. And of course, you can always go to the TradingView blog and get more detail on this if you're interested, because this is all relatively new. All right, guys. Okay, that'll be a wrap for this one, but we've got more to come.